Hello, hi, namaskar to all the viewers of this channel and also my dear CS students. See, in the earlier session, we completed uh, 8 classes on this depreciation, right? Now, let us move on to the ninth problem on this depreciation chapter, my dear students. Here also we have a change in the method of depreciation. See what happened here. First, let me read it out in a rough way. A firm purchased a second hand machine on January 2021. Purchased means M1 is purchased for 15 lakh and spent 2 lakh on its installation charges. On what happened? On October 21, another machinery was purchased for 9 lakh and spent 20,000 for its installation. So, purchased another machine means M2. Okay. Then बाद में क्या हुआ देखिए ना उधर. The firm also shifted the machinery purchased on January 21 to a new plant, incurred a freight of rupees 10,000 rupees. I explained this concept while solving the problem. They adopted a policy of charging a depreciation 12% per annum under what method? Under diminishing balance method. What method they are following? They are following the method of diminishing balance method. Fine. What happened? On April 23, it was changed the method of depreciation on a straight line basis. See, this is a very important point you need to remember. When they changed from 1st April 23, they have changed the method of depreciation from diminishing balance method to original cost method, also known as straight line method. The remaining useful life is assessed to 5 years for both the machines. For both the machines means M1 and M2, the remaining life is 5 years. बाद में क्या हुआ? On October 23, first machine become obsolete and sold. Which one is sold? M1 sold for an amount of 2.5 lakh. Okay, now I am reading in a rough way. When I prepare a table, I go in a detailed way. On the same date, another machinery was purchased, means M3 was purchased for an amount of 2.5 lakh. Estimated useful life is 10 years with a residual value 30,000. Residual value means scrap value. This is how you have to follow in your exam when you are writing exam, right? Then what to do? You are required to prepare machinery account for the year ending 31st March 24. So you have to prepare machinery account for only 1 year. Okay, fine. Shall we move on to solution, my dear student? See what I should write here. First I should mention depreciation. What percent? See here. Now I am going in depth. Depreciation is what percent? 12% diminishing balance method. 12% diminishing balance method. बाद में from 1st April 23, depreciation is OCM or straight line method. But here rate of depreciation is not given. Fine. Closing date. See, when the accounts are closed, it's very easy to identify, my dear student. You have to prepare for 1 year ending on 31st March 24. Ending on 31st March 24 means you have to prepare for only 1 year. Ending on 31st March means accounts are closed on 31st March every year. Okay, fine. Now let me prepare a format. How many machines we have? We have 3 machines, right? Now I read the problem in depth. Now I read the problem in depth. Okay. See. M1, M2, M3. Shall I start, my dear students? Please listen with a lot of interest. Now, M1 was purchased on 1st April 21. When it is purchased? On 1st April 21. For how much? 15 lakh and 2 lakh spent on installation. 15 lakh plus 2 lakh, it comes what? 17 lakh is the value of M1. Did you understood? Fine. बाद में क्या हुआ? On October 21, another machine M2 is purchased for 9 lakh. Installation is 20,000. So what is the value of M2? including installation 9,20,000, right? When it is purchased in the same financial year, October 21. Hua. Then you see what happened. The firm, please listen my dear student, the firm shifted the machinery on April 21 to the new plant. The machinery is taken to new plant. Incurred a freight charges of 10 rupees. What to do with the freight charges? See, any shifting expenses. What expenses? What expenses? Any shifting expenses means expenses which are incurred on shifting the machine from one plant to another plant. Did you purchase any machinery? No. What you have done? You have shifted your machine from one plant to another plant. To make you understand, I take a small example. You are staying in one area of a Bangalore. For example, you are staying in Jainagara of Bangalore. Now you are shifting from Jainagara to Katriguppe, a rented house from Jainagara to Katriguppe. Then what you people will do? You take all your items in a Jainagara house to the another rented house in Katriguppe. Did you purchase anything new? No, just you are shifting. Shifting expenses is a revenue expenses. It is no way concerned with increasing or decreasing the value of asset. That's why, my dear student, the shifting expenses is to be ignored. What to do in depreciation? It is to be ignored because it is an indirect expenses and it comes in profit and loss account but not in depreciation account. They adopted depreciation 12% diminishing, fine. बाद में क्या हुआ? On April 23, it was decided to change the method to straight line basis. वो भी हो गया. Life कितना है? 5 years. किसको? For M1 it is 5 years. For M2 also it is, life is 5 years. On October 23, my dear children, first machine become absolute, adopted, outdated and sold for 2.5 lakh. When? 1st October 23. Now let me write. On 1st October 23, M1 sold for 2.5 lakh. Okay, 2.5 lakh M1 sold. On the same date means on October 23. Another machine was purchased for 8,50,000. On what date? 1st October 23, another machinery was purchased for an amount of rupees 8.5 lakh. The estimated useful life is 10 years. See, for machine 3, life is 10 years. And residual value 30,000. Scrap value is 30,000. But for these machines, no scrap value. For M1 and M2, scrap value is 0. Remember. Fine. Then what to do? You are required to prepare a machinery account for 1 year. Shall we move on to the actual solution, my dear student? Now what I should write? I purchased this machine on 1st April 21, right? I have to write 1st April 21 as the cost. Okay, fine. Now shall we go for real solution? Now we are on 1st April 21. When it ends? It ends on 31st March 22. Depreciation, what percent? 12%. Under which method? Under diminishing balance method. For M1. M1 purchased on April 21, 1st April to 31st March. We have to calculate depreciation for 12 months. M2. M2 is purchased on when? In the same financial year, October 21. 1st October to 31st March. Use a finger and work out, it comes to 6 months. Now take the calculator, 17 lakh into 12%, okay, into 12 by 12, it comes to rupees 2 lakh 4,000 for the first machine. For second one, 9 lakh 20,000 into 12% into 6 by 12, it comes to rupees 55,200. Please use a calci and work out. Nothing is to be charged for the third machine because it was purchased in October 23. Now let me write 1st April 22 financial year. Now I have to write balance. Subtract it, you are getting 14,96,000. Here 8,64,800. Same with 8,50,000. Now we have to end on 31st March 23. Depreciation again 15% under diminishing balance method. For M1. Now M1 become your old machine, right? Calculate depreciation for 12 months. M2 is also old machine. Calculate depreciation for 12 months. So under diminishing balance method, 4,96,000 into what percent? Sorry, it is not 15%. It is what percent? It is 12% into 12 by 12. It comes how much, my dear student? Use a calculation workout. It comes to 1,79,520. Here it comes to 1,03,776. Nothing for third machine. Now you work out a balance. I go for next page. The balance is on what date? On 1st April 23. I write the balance. Subtract these two numbers. It comes to rupees 13 lakh 16,480, 7 lakh 61,024. It remains same, 8,50,000. Now what happened? Now I am on 1st April 23, right? See what happened. On April 23, depreciation is changed from diminishing balance to OCM method. Secondly, on October 23, M1 is sold. What sold? On 1st October 23, M1 sold. What's the time gap? April, May, June, July, August, September. 6 months. What's the time gap, my dear children? The time gap is 6 months. Okay. Again, the depreciation method is also changed, right? Depreciation is what? Now the depreciation is under OCM method. Further, are you given with rate of depreciation? No, rate of depreciation is not given. In such case, what to do? Depreciation is cost minus scrap by life. For how many months we have to calculate? We have to calculate for only 6 months. 6 by 12. Now, what is the cost of this particular machine? Cost of this particular machine is only 13 lakh 16,480 minus scrap is 0, life is 5 years into 6 by 12. Hai na? See here. What? Scrap is 0 for M1 and M2. Life is 5 years for M1 and M2. It comes how much? Use a calculation and work out. It comes to rupees 1,31,648. Then sold M1. M1 is sold for how much, my dear student? M1 is sold for 2.5 lakh. Now you work out a balance. You are getting a balance of 9,34,832. Out of this, you subtract these two numbers. Since you are getting a positive, since it is a positive sign, we have to call it as loss, as a opposite, right? Instead of subtracting the sold out of book value, we are subtracting book value minus sold. So we have to take loss. Fine. After this, what happened? 31st March 24. Depreciation is under what method? OCM method. Right? Now for M2. M2, what is the cost now? 7 lakh 61,024 minus 0 divided by life is 5 years for 12 months. for M3. See my dear children, M3 is purchased on when? M3 is purchased on October 23. October, November, December, January, February, March. So on M3 we have to calculate depreciation for only 6 months. How to calculate? Cost is 8,50,000. Oh, scrap be high. What is scrap value of the M3? Scrap value is 30,000. Life is 10 years. For how many months? For 6 months. Use a calculation and work out. It comes to rupees 1,52,205 for here, 41,000 for M3. Now you work out a balance. Balance on when? We have to work out a balance. The balance is to be worked out on what date? We have to write balance on what date? On 1st April 24. Balance. It comes to rupees, nothing for first one. 6,08,819 for the M2 and 8,09,000 for the M3. Now what we have to do? We have to prepare machinery account for 1 year. That 1 year is 23-24 financial year. Mention the date, particulars, debit, credit, everything. Fine. Now we have to write for 23-24, right? See my dear student, now we are in 23-24. This belongs to 21. This belongs to 22. This belongs to 23. Am I right? On 1st April 23, we have a balance. 1st April 23. Two balance brought down, M1 and M2. See, what was the balance of M1? 13,16,480. For M2, 7,61,024. Add both the machines. When you add both the machines, your total comes to rupees 20,77,504. But on October 23, what we did? We purchased a new machine called M3. See, M3 is purchased for how much? 8,50,000. No installation charges, nothing. Okay, that completes your opening balance. बाद में क्या किए? October 23 you have sold M1. When you sold M1, you got a depreciation, you got a sold value, you got a loss value. All these items are to be credited to your machinery account. All these items are to be credited to your machinery account. 1,31,648. On what date? On 1st October 23. By depreciation account 1,31,648. By bank as a sold M1. See, M1 is sold for 2.5 lakh, right? M1 is sold for 2.5 lakh. Then buy profit and loss as a loss. Loss is how much? 9,34,832. 9,34,832. बाद में क्या किए आप? 31st March 24 we put the depreciation. Depreciation on what? On M2 and M3. See, what is depreciation on M2 and M3? Add both. 1,52,205 plus 41,000, it comes to 1,93,205. 1,93,205. Now you work out a balance. The total comes to rupees 29,27,504. 29,27,504. We have to write on 31st March 24, by balance carried on. Work out a balance. The balance comes to rupees 14 lakh 17,819. On same date, next financial year, it is to be brought down 14 lakh 17,819. I hope, my dear children, did you understood? Please go through this problem. It's a very, very important problem for your main exams. Okay. Thank you. Take care. Bye bye. Namaskar. All the best.